Good afternoon. Welcome everyone to this live webinar from Amsterdam, brought to you by Intertrust, the DSA and Hypoport. My name is Johannes van der Meij. I work for Hypoport. We are the host for today, from our new offices here at Amsterdam Zuidas. I'm excited to be joined by four excellent and wonderful guests today, which I would have loved to join for drinks at the Bamboo Bar at Barcelona, but unfortunately we can't be there, and we hope to bring you some interesting content today. On my left, Ruben van Leeuwen, Head of Credit Strategy and Regulation at the Rabobank. To my far right, Ello Dusee, Managing Director of Corporate Finance Boutique Ovium. Yep. Arjan Scheltema, to my far left, Partner at NautaDutilh, our legal hand of the day. And Koning, Director of the DSA and Issuer Liaison at PCS. Today we would like to update you on the COVID-19 effects on our Dutch mortgage market. And we'd like to make you feel a little bit back part of our market again, our great but intimate market. If you haven't done so already, now will be a good time to open a beer, sit back, enjoy and relax. But not before we warmly invite you to join our discussion today. There's a chat dialog box just below this webinar where you can input your questions or views. Our moderator will select the best ones and pass them on to us here on the screen. And hopefully we'll see a lot of impact there. Let's kick off this first part of the webinar. Ruben, starting with you. It's been one hell of a ride the last 3 months. We've seen the AEX go up 40%, go down 40%, but back up recently. We've seen a very grim macroeconomic outlooks from IMF, from the DNB, as well as your own Rabobank. Predicting the worst depression since the 1920s. Nonetheless, the sun is shining and everyone is out. We see a mixed bag there, this is for sure. We've seen capital markets, spreads widening, very little issuance lately. In relation to these circumstances, what's your view for this year and the coming year, and the pivotal factors underlying the performance of our market?
No, I think what you just described actually, I think the outlook for the European securitization market is a challenging one, without any doubt. Yeah. We have a truly global pandemic on a massive scale as well. In the first place, of course, a health crisis, but the economic lockdowns, or the lockdowns that actually were taken to flatten the curve all across the world, have resulted also in a very deep economic crisis. And in fact, actually, we are at the moment actually in the deepest recession, as you already described, actually, in the post-war economies. Yeah. Statistics are not lying here. Every time we see statistics actually on real economic activity, but also on confidence readings, we're quite surprised. You really have to look twice actually whether they are correct, how negative they often are. And it's not only unemployment in the US, but also in Europe, confidence readings are, as I said already, but look also at real economic indicators like car sales, now they have really plummeted. Yeah. So that is quite challenging. I think you already mentioned the depression. If you also compare the current kind of crisis with the depression in the 1930s, there are some differences though, of course. This is a virus. Actually, the depression actually had some other causes. Depression was also quite long. It took 3 years actually before the economy started to recover. And fortunately, we have actually a better outlook now. And in fact, we're already in the easing phase, basically, of the restrictions, and the economic activity is already restarting. So we can cautiously already conclude that the worst is already behind us. And that means that the economic kind of crisis is short-lived, but still deep. I think to put that into perspective. What is also more important is the effect it has, of course, also on the securitization markets. In terms of performance, look, for example, unemployment and other factors. But you also have to consider here the kind of mitigation factors, which are also different than, for example, in the 1930s. They follow relatively late back then. Yeah. The policymakers have not been in standstill mode, fortunately. In contrast, actually, it's exactly the opposite. From the monetary side, there was already quite some pressure on easing. So central banks were already actually in the kind of easing policies, so lower rates, for example. And the outbreak of COVID-19 has only increased this pace, and has triggered a kind of extreme kind of stimulus mode. I won't mention all kind of facilities, but we know that the Fed has decreased rates. We see further increases in asset purchases, the quantitative easing, including also, for example, on ABS. We see massive rounds also of liquidity injections into the system. Actually, as we're speaking today was the inscription date for the new TLTRO facilities from the ECB. Tomorrow we hear the results on that. Expectations are for a relatively also an absolutely big uptake on that. Really in billions. If taking everything together here from the monetary side, we're literally speaking about hundreds of billions in euros or dollars or other currencies of stimulus. Yeah. And that, of course, has its effects as well, and can mitigate quite something, I would say, of the negative kind of consequences of COVID-19. And that's not all, because also from the fiscal side, there's a massive stimulus going on. That's more diverse across countries. We see various kind of measures. The most important ones, payroll subsidies, which are, example, in Western Europe at least, are quite big, in the Netherlands as well. Yeah. And they also have an effect, because in the Netherlands, for example, 1 out of 4 employees has now income that is at least partly subsidized by the government. And that, of course, has also prevented massive surges in unemployment, in contrast, for example, to the United States, where we see that actually, and you don't have such facilities. We see various grants to SMEs. We see self-employment support facilities, all kind of different loan guarantee systems in place to ensure there's still liquidity provisioning also from the banking sector to the real economy with government support, and that is helpful. Nonetheless, unemployment and also insolvencies are still rising, but I think it's quite clear without these measures, these mitigation measures, the rises would have been much more extreme.
Will it be enough, in your view, if you look at what has currently been done by the government?
Yeah, for the moment, yes. All those policies are quite divergent, already set across countries, but the kind of common goal is here to bridge basically the damage caused by COVID-19, at least temporary. Everything is focused on liquidity. I think that's good. And if it's really a short-term crisis, it's probably sufficient. If it's more long-term, and we definitely cannot rule that out, then I still foresee issues later on, because then also the kind of solvency issues will get more problematic. And then, I already said, unemployment actually could increase further. But here we are also getting to the risk factor, and that is actually, we still have the virus. We all realize the virus is not gone. And that makes it also quite uncertain. That's also the big disclaimer, I would say, in our kind of outlooks. I think in every outlook. We're still waiting for the vaccine. No one has any clue when it will arrive. I really hope it will be soon. But is it realistic for now? I don't think so. And then there's still the risk of a new wave of infections and what that could trigger. If then new lockdowns have to be implemented to contain basically the virus again, so flatten the curve again, basically. Yeah. Yeah, then the kind of economic consequences will be quite severe. And it is not just multiplying it by 2, in my view. We fear actually then the kind of effect, for example, in unemployment, also in insolvencies, but also in house prices, will be more than linear. Probably like the virus itself.
Popular snowball effect.
Basically. Yeah, and indeed, because then also the kind of mitigation measures will be less effective. For house price, for example, for the Netherlands, even without that second wave, we still foresee actually a modest drop of some 5%. In the end of the year, the beginning of next year. But if we get a second wave and new lockdowns will be implemented, the confidence on this market will evaporate very quickly. And then the kind of corrections will be much more in double-digit territory.
Clear. Rob, have you already asked for a payment moratorium, or are you still paying your mortgage?
I'm still trying to pay my mortgage. As a ZZ payer, of course, I am a challenging factor in the economy. But one question I had for Ruben, in fact, is about the ECB support, because a lot of people are now saying, in fact, that ECB is creating a carry trade where people can just draw enormous amounts of money at the bonus of 1% and buy Italian government paper at 1.5% and have a nice carry of 2.5%. I mean, do you really think that that's a risk, or do you think the banks will use the money in the way it is intended to be used?
Yeah, there's of course no formal kind of goal to that. You only get the minus 1% if you are lending, though. So there is a kind of target actually included in that. Nonetheless, if you don't do that, you still have minus 0.5%, which is still actually cheap and better than free. So it could be the risk, but there's also a bit of the intention, of course, to keep all kind of spreads also low and also keep the kind of overall financing to the real economy still very affordable to companies and to also households. The risk is, of course, that it then hangs on in the financial system and will not be distributed ultimately to the real economy. But to be fair, that was already the risk in the past years with all the kind of asset purchases we have seen in so far.
But the strange situation now is that compared to the crisis of 2008, we had to wait for 2 years until ECB provided liquidity to the market. They were complaining. And now securitization industry is complaining because ECB providing liquidity within 2 days in huge amounts and in fact are shutting out covered bonds and securitizations.
Yeah, basically already
it's never an optimal situation.
Are you saying we should put more women into the power of authority?
Absolutely.
Lagarde over Draghi, for example? Great. Ello, what's your view on Ruben's partly optimistic, I would say, vision?
Oh, I don't really have a view. I would have a question. I mean, all these stimuli packages, I presume they have to be repaid at the end.
Yeah.
How would you think this is going to be affecting the long-term growth of the economy? Because I can imagine that it depresses the growth for tens of years if we're talking these amounts that you were mentioning.
Yeah, that depends actually, of course, on what kind of measures they will take in the long run to calibrate this again. You're all kind of politicians actually stressing there's not the time to discuss now. Partly agree with that because everything is now on short term and it should be plenty available to the real economy. But these kind of discussions will later on actually increase. And of course, we borrow now from the future, so it has to be repaid at some stage. But there is a bit of a helpful factor is just low interest rates. Makes the kind of borrowing very cheap.
Yeah.
But ultimately, we're looking here at some calibration effects, some rebalancing effects later on. And that's also what we foresee a bit, is that the kind of structural economic growth will also be lower actually in the future.
Than you would have expected 3 months ago.
Yeah, exactly. But there's also something else here. That's, of course, the virus. And even if there's not a second wave, for example, we're also relatively downbeat on the kind of V-shaped recovery. So you said we're relatively optimistic. I really hope that. But if you look at the kind of our recovery forecasts for next year, for the Netherlands, for example, we only see 3% economic growth. Okay, the Netherlands is a bit of a special case because the lockdown has not been that strict here. So the kind of relative impact is more muted in other countries. We won't go back to normal for now. We still have to live in this 6-feet economy of 1.5 meter economy, as we call it in the Netherlands. And that actually means that restaurants, for example, have reduced capacity. And that also results in a lower structural economic growth, at least in the medium term.
Yeah, and I can imagine that we were already not leveraged before this started. Are we not becoming over-leveraged?
Do you mean the government here or the whole economy?
Altogether.
Yeah.
I mean, at the end, the government is nothing more than ourselves divided. The government by 18 million is ourselves, isn't it?
Yeah, I heard the CPB say that our government debt will rise, but not until I would say dangerous levels, as they stated. That seems somewhat helpful, but obviously that can change. What do you think, Ruben?
Yeah, also that differs per country, of course. In some countries, also including the Netherlands, there is still fiscal capacity basically for these support facilities. In other countries, that's much more challenging.
How long would we be able to keep this up? Paying wages for everyone. I mean, at the end, at some point in time, it must stop.
I think that's a bit the bet here that also policymakers have made. I think both from the monetary side, but especially from the fiscal side, is the bet that the situation will be relatively soon under control.
Yeah. Okay.
And
in terms of months,
this is not
rather than
indefinite,
years.
to be fair. And I think we are already getting in the stages. What kind of support are you still giving to the real economy? And I think already quite soon you get kind of discussions. Actually, do we have to save this company? And that company not. That's quite arbitrary.
Sure.
Yeah. I think we have a caller on the line. Obviously, we asked you to participate, and I hear that everyone is stepping in. Is that correct? Great. Today, joined from ABN AMRO is Mark van Lent. Welcome, Mark. Welcome in the webinar. Thanks for joining. What's your vision on the fairly optimistic but partially grim outlook as well? What's your view on that?
Yes. Good afternoon. Can everybody hear me?
Yeah,
I hope so.
Loud and clear.
Okay, great, excellent. So what we saw was that in April and March, large part, there was just no market open. Many fixed income markets had difficulties. placing any paper. Luckily, in May, it began to get more traction again, also in the ABS markets. So we've been able to help MeDirect with their Bastion trade, the first RMBS to be launched after the mortgage crisis started, and successfully placed it externally. And thereafter, we've also seen BTL, we've seen some auto loans, auto lease companies being successful, and we're also currently exploring for Kander, a consumer finance company, as well the transaction opportunities in the market. So it's quite an interesting time. So in terms of deal flow expectation, we primarily look at two things. It's the supply and the demand side. On the supply side, we see that the banks have been holding off a bit now in going into the market. We found that our clients kind of wanted to wait and see a bit first to have the market stabilize, and at the same time as well use the LTRO programs just mentioned as an alternative source of funding. If you look at the non-banks though, which can't use those funding programs, they also try to extend a bit, but many of them have plans to go after the summer in the second half of this year, which I think is hopeful. Everybody hopes that the markets are sufficiently stabilized at the time. They can continue or extend warehouse lines they get from banks currently, and but they can't be continuing that forever because their business models are most of the times built on selling deeper into the capital structure. If you look at the demand side, so the investor side, we see a couple of things. On the one hand, a couple of large asset managers have to deal with a transition in that there's a bit of asset relocation from one investment class to another investment class. So that may give some limited outflows also for ABS. At the same time, lots of investment grade fixed income funds get a lot of inflows today, which is a positive. So what we hear more often is that investors struggle to get their money to work in this market because there's just too limited supply or too limited options in the secondary market. And I think when there is, let's say, a deal out there, the primary challenge today is as well getting the pricing right. So the pricing today is in this market obviously something which is more difficult to establish because there's not so many transparent benchmarks available for ABS. So it's very much a search action together, and doing this exploratory together is an important exercise. So what we typically see in deals now is that you wall cross investors early in the process, get them comfortable with the specific deal which we're working on, also with the portfolio, what's happening in that sector, and then subsequently do some price thinking together on it, what's appropriate and what would fit given the market circumstances. Carefully building a book before publicly launching the transaction is very, very much important. And you see therefore also a lot of the trades which are out there have large part pre-placed tranches. Yep. If I'm looking at another factor of the supply side, that brings me to a question also for Ruben, is that I see that the asset-backed securities purchase program of the ECB could also be a huge factor for extra demand. So far, though, we see very limited extra activity from the ABSPP. Just wondering what Ruben thinks of what will be happening in the next half year.
Yeah, of course, I cannot be decisive here for the ECB what they're going to do. I think the ABS purchase program, actually you can ignore it in the context of QE. It doesn't play any role at all. You don't see it back in sizes, for example. I think for the ABS market it's still important because relatively speaking, they still hold a lot of paper. Actually, during the outbreak of the COVID-19 crisis, they bought quite a lot, some 5 billion. And afterwards, it's much more silent actually from their side. Would not actually complain too much about the ECB here because I think it's just also the reality in the market. So the supply, okay, it's rebounding a bit, but it's still very low. And the outlook for supply is also just quite moderate. And that also means there's also a very moderate outlook here for extra purchases from the ECB side.
Yeah. Does that comfort you a little bit there, Mark, or not so much?
Well, we always hope, obviously, for this specific market that there's loads of extra money there to be invested, so that spreads get to levels which make sense very much then to the issuers. But I understand, obviously, that a couple of asset classes get priority now. But thanks, Ruben, for explaining that.
Welcome.
Thanks so much, Mark, for joining us this afternoon. Great. Ello, what's your view on the moderate deal flow and what actually Mark brought in, that you need a probing a little bit of the deal? How do you look at that? Is that appropriate? Is that useful in your view?
Well, I'm obviously less close to trading, particularly secondary market trading. I mean, I do read research reports like Ruben produces, and I see indeed the bid and ask being very wide, spreads going all over the place, also over time. Initially, there was quite some widening, and now I see already coming back. But that's all derived from what smart guys like Ruben tell me in their research papers, not because I've been involved in trades myself.
Yeah, that makes sense. And on the legal side, Arjan, is that something that probing influences that, for example, the prospecti or of a deal, or would you not see any effect there?
Obviously, you need to comply with all the regulations in that respect, but I don't think that the legal side of things is too important here, in the sense, obviously, you must inform all the investors alike, but I think the probing in itself is more an economic point. I think you can do it between boundaries. Yes.
I think it's also driven just by a lack of secondary market, which is a problem actually that is quite specific to ABS, probably also more general, increasingly, with the ECB actually taking bigger stakes also in other markets. And then price discovery is simply not there. And then primary market is indeed actually now the most liquid market in a way, where demand and supply have to come together.
Yeah. Yeah. Okay, might be very interesting to take the angle from the seller, the originator side. On the call, I welcome Sjoerd Humble from Opvion. Sjoerd, you there?
Hey, Johannes.
Good afternoon.
Hello.
Thanks for joining this afternoon. And welcome to the webinar. Hearing all this discussion and hearing basically Ruben's outlook for the next 12 to 18 months, what's your view on from the seller and originator side?
Yeah, maybe a bit of color from us as a mortgage originator on what we have seen in our with our clients. We started, of course, 3 months ago when the crisis hit us, and we got a lot of requests for payment postponements for clients. Up to now, around 50 basis points of notional in average of our transactions has been affected by clients that told us that they could temporarily not pay on their mortgage due to the COVID lockdown. Of course, every client has his own situation, but I think a couple of examples of types of clients that you could look at that had this actually liquidity problems in our view were people with an occupation like a hairdresser or a physiotherapist or even a dentist that had to close their practices, that all had small practices and could not work anymore from one day on the other, and were not able to use any other government support that was out there. We've been on the way now 3 months. So actually the first batch, not the largest batch, but the first group of people that asked for those payment postponements, they've come to the end of the 3 months period that we had granted it for to them. So I think I can say that we've been in contact with all of them, and the vast majority has indicated that after the lockdown has stopped, that their liquidity problem stopped and that they are able to pay again. And we were able to work with them in restructuring their loan in the standard same loan format. And the problem is sort of solved for them. There's only a small part of our clients that indicated that they still have payment problems. And for those clients, we're looking for a tailor-made solution. But there are so few that we do not, at this point in time, have a structural solution in place for clients. So from that perspective, that's quite optimistic, good news. Of course, all dependent on, like Ruben also said, the possibilities of a second wave. If a second wave hits, then there might be liquidity problems over there as well.
Thank you, Sjoerd. Is that also something, would like to jump to Rob shortly, is that also something that you hear from the other DSA members, other members that the payment holidays were there, but they are hopefully back to on track.
Well, first of all, the percentage of payment holidays that Sjoerd is mentioning, well, he didn't mention percentage with a number, but as a percentage, it's for all issuers, it's kind of the same range, also comparable to the numbers that the Dutch Bankers Association has been publishing. So last week they said 19,000 affected loans, which is roughly 0.4, 0.5%. So say the 50 basis points are the same for most people in the market.
Is it not widely distributed, the numbers?
No, I mean, it's an average. So there are people higher, people lower.
It's very widely distributed, because I see
Where would you
originators
see,
with
the problem?
4 or 5 basis points, and I see ones which have in excess of 1%. I would not know the exact reason, apart probably from, let's say, the enthusiasm with
different ways that people can approach them. And in some cases, it's close to self-certified. In other cases, you're directly guided to problem credit department. And that may have an impact on the specific percentage per individual issuer, I guess.
And the enthusiasm with which it is marketed. I mean, if you click on websites from certain originators, the first thing you see is a banner coming into your face. Would you like to have a payment holiday? And with other originators, indeed, you're simply redirected to the phone of a special servicing department.
For instance, in the UK, where it's all self-certified, the percentage on average is 10%. And that's quite different
even higher than that.
From the 0.5 that we have in the Netherlands.
Well, I think it's also just a helping hand of the kind of banking sector, financial sector to the real economy. And in fact, actually, this crisis is quite different from the last crisis. We had a financial crisis that actually resulted in economic crisis. Probably it's now the other way. I hope actually we're not getting in a financial crisis. But out of the lessons learned from the financial crisis, the kind of buffers in the banking system, for example, are quite big at the moment.
Yeah.
Can we switch shortly back to Sjoerd? Because we had two things here on the table, Sjoerd. The wide, I would say, distribution. Is that something you see as well? Certain areas being hit?
Yeah, I think we're, even with a wide distribution, we're still talking very small numbers. Yeah. And I think Ruben also mentioned that in the Netherlands there's been a good government support program for people, which was focused on keeping income and keeping jobs there. And a lot of people could benefit from that, and therefore they did not have to come to us as mortgage lenders because they couldn't pay their mortgage. So the actual amount of people that use it is really low. I think for everybody. I don't know how other originators have approached their clients. I think it's broadly all over the market. Everybody is supporting their clients, and I think this very special situation that we are in, that also justifies the extra support to clients in a scale that we've never seen before. On Opvion side, we're very transparent to clients that we have the opportunity to help them. But every case is always treated by our special servicing department.
Thanks, Sjoerd. Thanks for joining us this afternoon, and have a pleasant evening and enjoy the beers, hopefully. Thank you. Let's move on a little bit more on the technical side and or dive a little bit deeper. On the program, we have the legal implications of the COVID-19 measures. Obviously, is everything permitted? What's happening at this point? We can do it, but is it permitted? And the SPV director side of things. So something happens in the SPV, which not necessarily is in the same line of interest, of course, than the bank's rest of the balance sheet. Arjan and Ello, could I give you the word? Arjan?
Yeah, sure. Thanks, Johannes. There's so much you can tell about COVID-19, but let's focus on the payment holidays. I think it was already on the table. Payment holidays, there's not much legal guidance in that respect. You do see the EBA guidelines being published for banks. So the European Banking Association has provided guidelines for banks how to treat payment holidays on their balance sheet and their regulatory capital. Also for securitizations. So for banks who hold securitizations. To my knowledge, that guidance is not applicable in the Netherlands because we don't have any legal or general payment holidays. I think you know that better probably. The coordination has not been that fruitful in the Netherlands for banks. They're all doing it differently.
In other countries you have this. So, but
and some you do. Yeah, the EBA guidelines may even be instructed by the southern countries, but well, we don't know. Well, it's just guessing. Then if we come to the banks, and the originators, how do they treat the arrears? The payment holidays? And I think there are two possible ways of doing it, but you can follow the EBA guidelines in the same manner, and by saying you agree with the client a new payment term, and therefore if it complies with the new payment term, then that's sufficient, and the amount is not due, and therefore it cannot be in arrears.
Not payable, you mean?
Not due and payable.
No, due it is, isn't it?
Well, it's due at a later point in time.
Yeah.
Agreed. You should always still look at the question whether or not that borrower will in the end be unlikely to pay or not. But that's a different question. Then turning to securitizations, the topic of today, obviously. Can you even allow payment holidays in securitizations? I mean, everybody does it, but can they do it? That's an easy answer to that question, but it's a bit disappointing. It depends really on the transaction documentation.
That's a consistent answer over the last 10 years, huh? Depends on the documentation.
And that's why we work, yeah. No, I think the documentation is generally speaking, allows the sellers to amend the mortgage loans and allows them to change them in a certain manner, provided that the eligibility for the transaction is not touched. If that's not possible, because there are clauses preventing that, then you could always say the servicer can allow payment holidays. And I think it's either explicitly allowed or it is, in these times, the action of a prudent servicer. So I think probably it's likely that it is in most cases allowed under the transactions. Then coming to the treatment of those payment holidays. If you treat it as an originator on your own balance as not being in arrears, then the question is, can you do the same for the transactions? Yep. If you treat it as being in arrears, I think you don't have a choice. The same answer again, Ello. I'm disappointing you a little bit, but it depends on the transaction again, and the definition of arrears, obviously. But if you follow the logic from the EBA and what banks sometimes do, you say the seller amends the mortgage loan, allows payment extension, and allows that the borrower pays later. Sorry, payment extension allows the payment holiday. Then you could say, well, you could argue that's not in arrears again. If you come to payment holidays granted by the service, it's a bit of more of a gray area. I mean, you could say it's either in arrears because it's in the special servicing, or you could say this is, in these times, this is part of the normal servicing. And I think that's more a gray area. So it's not straightforward in that sense. And I do think that it is important to think about how the transaction is structured and how the arrears are used in the transaction and what is the economic purpose? What was the intention of the parties when they made the documentation? It's obviously, it should be in there, but what was their intention and what could you see from the prospectus and so on, what they intended to do? And I think that's also partly an economic question, which is not solely a legal question. And I think, Ello,
I think the intention, that is indeed where I would like to focus on. I mean, in many transactions you see triggers, which are based on certain risk levels being breached or not. And to my understanding, the intention of parties at the time was that those triggers would serve as an early signaling function.
Yep.
So
limiting risk, basically. Yeah.
Well, making the transaction more robust in whatever way. That could be by increasing reserve account target levels, by switching pro rata to sequential principal down payment. Could be stopping replenishing.
Yeah, sure.
And the question is now, if you don't include the current payment holidays into your arrears numbers, Mr. Jansen enjoying that payment holiday would normally serve as a signaling that probably in the future also Ms. De Vries, which is not currently even benefiting from a payment holiday, could get into financial difficulties. And I think if you would not include them in those arrears, then you forgo that whole signaling function of currently observed arrears being a signal of future payment behavior. And I think that is what has been the intention of parties at the time. And don't forget, I mean, I heard Sjoerd saying that financial institutions are not so badly capitalized as they were back in 2008-9. But that does not apply to securitization vehicles. Huh? We are very thinly capitalized. So we need those early warning signals and then making ourselves robust for if something goes wrong in the second half of the year. So that's why I would argue that it was the intention of parties to include them, even if the legal basis may not really justify that because of the reasoning of Arjan.
Yeah, I'm not saying that I'm disagreeing, but if you look at what Sjoerd just told us, they're saying, well, a lot of hairdressers have granted a payment holiday, have had a payment holiday, and now start repaying again. So it's unlike before. We just didn't know that this type of crisis could be there, in that you have a payment holiday for 3 months and then everybody goes to work again.
No, okay, and maybe that may not apply for the hairdresser, but if the person enjoying a payment holiday works in leisure, it may well be that the downturn for leisure has nothing to do necessarily with the current corona situation, but that leisure will not pick up to its old levels over the next 2 years. So it still serves as a signaling. And that applies less probably to the hairdresser.
Yeah,
I mean, people will go again, I presume. Well, you.
I just missed it.
Yeah, you missed the slot.
No, I'm not disagreeing there. I think also a good question would be, how would you structure it now with the view to this crisis? Would that make a difference for structuring in the transaction? And I think, yeah, it's an open question. I don't know, Ruben or Ello.
Well, if by a restructuring of a loan it automatically would no longer be viewed as an arrears, I think that would be too easy to escape for investors to accept for future transactions. So they may want to argue that you then literally put it in if a transaction is structured because of temporary payment problems.
And what about eligibility?
That you will need to include them in the risk. I think it will be made probably.
Okay, we can see what the transactions in the future will bring us. I mean, it will depend, I think.
Yeah.
Could we see eligibility criteria on this?
The requirements on the investors side are mainly that they want to have the information, not necessarily that they want to know that the payment holidays are really taken as arrears, but they want to know how much is real arrears, how much is payment holidays, and on that basis, I think for new transactions...
Yeah, until transactions starting to collapse. I'm not so sure that then they also only want to stick to transparency, or whether they would have liked to see non-DPP payments, for example, over the periods running up to that.
But I think it's a very good point Rob is making there. I think what is really important, we didn't talk about it, is the reporting. I mean, be transparent on what you're doing. Yeah. And make sure you can, if you don't treat them as arrears, at least report what is payment holiday. Then it can always be found out what should happen with that, and you can discuss that. And everybody knows and is on the same page. And I think, do you agree?
Mm-hmm.
From the Hypoport practice, we see the same thing, that as soon as the low numbers of payment holidays came out, the investors kind of relaxed a little bit. But I'm agreeing with Ello that obviously things could turn bad, and then the transaction should work appropriately as designed. So you're saying basically you should report the arrears already, be prudent there, be transparent.
That would be my personal view. I'm not necessarily saying that the SPVs will all assume that point of view, but having structured quite a few deals myself in the further past, I think that is what would be a prudent approach. And I also think that that's the best way to show investors that you are a country with prudent originators as to restore or retain their confidence, as we all want to see very tight spreads over the longer term and don't want to be punished for now being cowboys. Isn't it, Rob?
No, I agree.
Rob has long forgone his cowboy hat there.
Yeah,
a little bit.
One thing maybe relevant for the reporting side again. I think there is on reporting there are different ways of treating the arrears or the payment holidays, how you would like to say that. also make sure that you calculate the principal and interest separately. Make sure that it is clear, because almost all transactions in the Netherlands have a clear distinction between principal and interest.
Yeah.
And if you include it as a new loan, which some originators do, then it's all combined on one level, on one big pile. But make sure you can identify and you know what happens there.
Yeah, exactly. What I see people considering at the moment, quite many transactions would be affected by that, is that they indeed roll the forbeared amounts up into a new loan part, and thereby effectively converting interest, forbeared interest, into principal. So you get an imbalance between receivables on the one hand and notional of notes on the other hand. But even worse, in the future, you're no longer able to allocate monies correctly, and you're allocating them to the principal waterfall, whereas a part of should have been allocated to the interest waterfall. And that not only affects note holders, but similarly swap counterparties, probably.
What's the reason that's not appropriately split there?
Well, it has not been completed, finalized yet, that administrative treating. And that's the reason actually that we also bring it up.
Yeah.
We should try to get the systems in place, administer those loans in such way, those payment holidays, that we are going to be able to continue to correctly allocate monies.
Yeah. So it's either arrears or you calculate principal, you distinguish between principal and interest, which you defer until later.
But that also requires that the originators take a decision on how they are going to handle those delayed payments from payment holidays, whether they see it as an additional loan next to the existing mortgage, whether they see it as a change in the normal installments over a certain payment period. And of course, in the Netherlands, you have the additional issue that for tax deductibility, it has to be 360 days. So you cannot add the payments to the end of the loan. It has to be somewhere spread over the existing loan. But as long as it's not decided how you do that, it's always very difficult to decide how you're going to report it, because
but what my understanding is,
affects
for
the
example, that all loans which are serviced by Stater or Kiel, both institutions have currently the same ID, to my belief, of how to administer that restructured loan.
Yeah, but the originators have not all made up their mind how they're going to recover the deferred amounts, whether that will be in a separate loan or further advance, or in just a change in the installments. And that ultimately is also relevant for how you're going to report to investors what your position is with those, let's say, legacy payment holidays over time.
Yeah, but I think that Arjan and myself are
just a minute, because we got a caller on the line which could add to this discussion as well. I think Hendrik-Jan Luikinga will join us from Nationale Nederlanden. Hendrik-Jan?
Hi, good afternoon, Johannes.
Hi, good afternoon. We're having a discussion here. Hopefully you've picked up a bit of
Yes.
Arjan raised the point of transactions might be structured in a different way. You just issued HIPN number 7. There's also discussion around arrears, around principal, which should not be mixed up with interest. Back to the first part, the structuring of a transaction. Is there something different, I would say, in these corona times, in your view? And how do you handle those arrears and principal and interest problems?
It's quite interesting if you start structuring a transaction in these days, because you have to take a risk factor in your documentation that's linked to the COVID-19. And when we started structuring, we didn't have any view of the number of applications from our customers. But it started with a big increase within the first 2 weeks, and then it stopped. And the number was quite small. And when after the opening of the Dutch economy again, then the numbers started dropping again. And it was already mentioned, but a large of these people who were out there for a payment holiday were a dentist, physiotherapists, and hairdressers and people like that. And still there is a pocket that will have an issue over time, that are people who are working in the leisure business or in the horeca. But they have other opportunities in the future. And one particular thing of these two types of business. That, they are highly depending on youngsters and students for their model to earn their money. So if you look at the whole picture, the total number of people who are infected are quite small. So taking these numbers as an early warning signal, then yeah, I'm a little bit more on the positive side. We have to look back where this crisis started. It's not the economical crisis, it's a medical crisis. And it's become an economical crisis. And we had all the weapons in place to stabilize the economy. And we got a different type of woman at the helm of the ECB, who is really capable of pushing the governments in support their local economies, and also change the policy, which is more favorable for the whole EU to stabilize the effects of the economic crisis, which is the started with the medical crisis. So I'm quite positive on the future, and the numbers that we see are dropping. And I also take a view, but that's a personal view, that the second wave won't be applicable because it will be only small pockets that will be locked up. Yesterday, schools in Beijing were closed, and schools and daycare of kids were closed, and commodities took a hit when that was announced. But these commodity traders figured out a few hours later that schools and daycare are not the users of metals and pork bellies. So I take a quite positive view on how the economy will evolve over time and how the housing market will adjust. And one other thing that I would like to remark, based on how the Dutch government has acted on the Dutch housing market the last 10 to 20 years, they created a housing market which is totally detached from what's happening in the economy. So it's amazing that when the economy comes to a standstill, that the housing market, the transactions are still moving at a level that we haven't seen in the months before. So I do take the view that we will have definitely a hit in our GDP that will never be made whole, but it's not as severe as we are now taking into account to the market.
Great.
So I don't see these bank payment holidays.
Just a second, because there are some interesting points here. You're basically very positive. How about the table? Do you share?
I have one question for Hendrik Jan before we go on. Just a basic question. Do you think that payment holidays should be recorded as arrears in securitizations or not? Because I'm very curious how you think about it.
I know his answer.
I take the view that as a bank, we need to apply the ABA rules, and the securitization entities are consolidated on our balance sheet. So if we take a different approach to our securitization vehicles, then we have a consolidation mismatch.
No, I disagree, sorry. That's not necessary. I mean, I only would like to see them included in the trigger measurements. So, and that trigger measurements have nothing to do with your IRS treatment, I guess. So
then I have to create 2 lines internally for my reporting. They're not treated as arrears. They're forbearance, which are treated as arrears. And then I have to create a reporting line towards my securitization vehicles that report them as arrears. And still we're talking about very small numbers, which are dropping already.
Yeah, but which could change as well, of course. But coming back to the point that Arjan made, that EBA rules might not apply to Dutch banks. How do you look at that, Hendrik Jan?
I think that, currently we apply the ABA rules towards the applicable forbearance that we put in place to our securitizations.
Yeah, to comment on that, I think the ABA rules are applicable and as guidelines for legal and general payment holidays. In the Netherlands, we haven't been able to come up with a general payment holiday for all the banks the same. But still, it's guidance from the EBA which you can follow and which may make sense if you apply it in the same manner as a general payment holiday. So
A grey area, so to say.
not a great. It's not directly applicable, but I understand if you want to use it for your bank balance sheet. I do agree with Ello that it does not necessarily mean that you need to do the same for the securitizations per se, but I do understand Henrik Jan when he's saying, well, then we need to report differently. And so there is a logic to do it the same, but it's not absolutely certain. I mean, if you would have in the securitization a clause saying, if you allow payment holiday for COVID-19, that will be a trigger, then you will need to report it differently. So in the end, it's comes to what is written there.
Okay.
And somewhere in time, these customers will move towards arrears. But okay, we missed the first few months, but everybody can do the math based on the numbers that you see out there and the people who are not paying their mortgages.
And Jan, thanks so much for joining us today, and enjoy. Hopefully you got the beers and enjoy them.
Thank you very much.
Enjoy. Next one on the line is Arno Fink. Arno joins us today from the Intertrust office. Arno obviously is director from various SPVs, a lot of SPVs in the Netherlands, and Intertrust is one of the largest trust companies in the world, managing SPVs. Arno, we got you on the line? Just a second there.
You're stuck in another phone call, I guess.
Yeah, maybe he's on a call again already, and with some clients discussing arrears and payment holidays. Hi, Arno. Good afternoon. Nice that you could join us today. What's your input for the panel?
Hi, Johannes. Thank you very much for having me. I hope I'm visible and good understandable at the moment. Can you hear me properly, Johannes?
Yep.
Yeah. Go ahead.
Great. Thank you very much indeed for having me. In response to your question and listening also to the panel just now on the discussion, I mean, obviously, as an SPV director, as we are at Intertrust, we are obviously actively engaging with our clients and other stakeholders and closely monitoring the developments in respect of COVID. For example, we have from the start formed an internal working group focusing on and dealing with the impact the COVID crisis may have on our transactions under management. But as just also discussed in the panel and with Henrik Jan, I guess in determining the appropriate course of action from our point of view, there are a few elements that are really key. So we do need to conduct a thorough analysis. We need to be prudent. And of course, obviously, you need to balance the interest of the stakeholders involved in an appropriate manner. And I guess it is also a matter of a case-by-case basis approach in terms of the transactions not all being the same. So I guess it's fair to say that those are challenging times and unprecedented times. But getting back to the panel, actually, if you allow me, Johannes, I'd like to raise another point or question, better said, to the panel. And I'm sure a fair number of the people from the audience today are old enough to have professionally experienced the 2008 financial crisis. And obviously that's many times referred to. But may I ask the panelists the following? In your view, what are the two main comparisons and differentiators between the current COVID-19 crisis and the 2008 financial crisis? And if you can, perhaps could you elaborate on your expectations about the magnitude of the impact of the COVID-19 crisis?
Thanks, Arno. Ello, you've been around we've all been around. Not speaking for myself. We have been around for quite a while. Could you comment on that? Because you had a direct impact, an indirect impact with influence on the crisis as well back in 2008.
Well, not on the crisis, I hope, but on
experience. Sorry, my bad.
On the SPVs. I think the main difference, but Ruben is probably more in place to comment on the bigger picture. I think on a transaction level, I think the difference here is that we see
Yeah.
the assets deteriorating. And we may see in a later stage, hopefully not, also the credit quality of our financial counterparties deteriorate. And in the 2008 crisis, it was obviously the other way around. We started off with Leeuwen tumbling over, DSA going bankrupt, etc., and a lot of other parties being severely downgraded. I think that's one big difference on a transaction level. I think the one comparison that I could mention is that going through a situation like this discloses effectively the conflicts of interest that exist between the different stakeholders. We have seen that at that moment in time, having interesting lawsuits, even with some counterparties, and we're seeing the same now, luckily not as severe, with the conflict of interest between, on the one hand, the originator, and on the other hand, the other stakeholders of the transactions. So that the good thing of these crises is that it brings them to light to improve the quality of future transactions. It does not necessarily add to the current atmosphere. And that was even more severely the same in 2009.
What's your reaction on that, Ruben? Is there a big comparison or not?
Yeah, I think the comparison is both unexpected and quite severe. However, the kind of economic standstill has been much bigger than back in 2008. So the kind of economic damage is, we're comparing here, a Great Depression kind of scenario. It's twice as big, for example, are the estimations as back in 2008. The differences, though, already mentioned by Ello, the former one was a financial crisis that became a real economic crisis. Here is actually a health crisis that has become an economic crisis. It could potentially still trigger a financial crisis, but for now, actually, that looks not to be the case. And I think also a crucial kind of different reaction, we already talked about that, is the reaction of the policymakers, which was very late in 2008.
Yeah.
And very quick this time. And that's actually quite good.
Yeah. It's not another difference, the global reach?
Yeah, indeed. And that's also in terms of economic impact, also quite different. Back in 2008, China was, for example, still growing.
Yeah.
Which is definitely not the case now. So also, if we look to our kind of GDP forecast, we forecast minus 4.1% decline in global GDP. That's a negative. And in 2008 we saw also negative, but not that negative as we currently see.
Yeah.
Thanks, Arno, for joining us today. Let's move on to a short question coming in from the chat. We all know Max Bonsoir from PCS, a good colleague of yours. Max brings in the question: given the wall of helicopter money, is the expectation justified that issuance will not or hardly come from bank issuers for some time to come? I think either Rob or Ruben.
I would like to comment on my friend Max.
Keep it friendly.
I think already for the last couple of years, banks that had access to, let's say, helicopter money or ECB funding or TLTROs or whatever, that those banks were not very visible anymore in the securitization market. Maybe they were still visible in the covered bond market. Even there, they are now kind of disappearing. But securitization already for a couple of years, maybe not in the UK, but the rest of Europe, has developed in a market for finance companies, for new startups, for banks looking for capital relief. So all kind of other purposes than massive liquidity as 10 years ago was the play. So that doesn't change anymore because it has changed already over the last 10 years. So we are now kind of in a stable situation where it's a different market. It's a capital driven, it's finance companies again, as I said.
Yeah, stable but strange. And then coming back to the point of Ello, it's interesting, Keon responded, saying that the Ministry of Finance has stated a payment holiday can be funded by the origination with a new loan with repayment schedule in 5 years. Should originators extend a loan to the borrower or on its own balance and use that money to fulfill the payment holiday, amounts to the securitizations. So should originators extend the loan to the borrowers on its own balance and use that money to fulfill the payment holidays, amounts to the securitizations? How do you look at that?
Well, that last structure, effectively pre-funding it, compare it to a further advance given by the originator. The good thing is that SPVs have the money. The bad thing is they, per definition, do not show up in arrears or do not longer serve as an early warning. I think I pass the question on to Arjan because it also has some legal implications at the same time.
Yeah. No, the legal implication is such that you, in some transactions, you can transfer new advances under a mortgage loan. So you would be able to transfer the further advance to the transaction. I'm not necessarily think that you will be in favor of that because you're then transferring the arrears, basically. The other point is that in some transactions you can't do that. You can't have the same loan to the same borrower because you're obliged not to have any other claim on that borrower because the security is then governed by both. Also the new loan is governed. It has the new security on it. Yep. So in that sense, if you do that, then that might end up breaching the transaction itself. So be careful when doing that. Make sure you do it either administratively, so basically in the SPV, and you write it up as a loan which belongs to the SPV. But if it's a new loan, it needs to be transferred. I mean, make sure that you either do that or make sure that it's not necessary to do that.
And purchased using principal.
Yeah.
That makes sense. And relating to that, Felix Berger from Service Capital came in with a question. The implication of a payment holiday for the borrower should also not be underestimated. They will get a BKR registration, which will have long-lasting implication. That's something that we haven't discussed yet. The BKR registration, when a payment holiday is granted, you're basically you're BKR registered. Maybe that's one for Rob or someone else from the panel like to comment.
Registered. Is that correct?
Sorry?
I didn't know that you would be BKR registered.
I think the intention is of most of the guidance to avoid BKR registration.
Yeah, because it's a little bit...
That was my understanding.
Yeah. No,
that's something to work out maybe. Have our fact checkers do that.
Otherwise we could just have let them go into arrears. I would be happy.
Then the circle is around.
Wouldn't really bother the borrowers either.
One comment on that. I mean, if you don't treat them as being in arrears, there's no necessity to go to the BKR. Obviously. Yeah. It's only when they're in arrears, what do you do?
Okay. We'll see contact with you, Felix. And thanks for all the questions from Max, Jerome and Felix. And then off to our last topic. Obviously, we live in a beautiful country here in the Netherlands. And we thought it might be interesting that we comment a little bit on what's special to the Netherlands compared to the rest of Europe, because we have a strange situation in some areas and a less strange situation in others. Rob, could you take us a little bit into that?
If you try to make an international comparison, we already touched upon that, the difference between the UK and the Netherlands. In the UK, where it is self-certified, 10% average payment holidays. The Netherlands, where it is a little bit vague what the rules are, but it's only 0.5%, so that makes quite a difference. Another element which can be different between countries and jurisdictions is, and then come back to my own position as self-employed. How many self-employed people do you have in a pool? For instance, European Data Warehouse has published an interesting report. It's only figures up to May, so it's not completely covering the whole cycle, but it very clearly indicates that it's not only different per jurisdiction how the payment holidays develop, but also within a jurisdiction, very different how it develops for self-employed and non-self-employed. And for instance, you see in the Netherlands where, although the self-employed are sometimes complaining, they got a reasonable level of support from the government. And there you see, in fact, the increase in whether it is payment holidays or delinquencies, of course. That's the old discussion, but the increase is relatively limited.
And in terms of arrears, do you see, for example, the UK or maybe other European countries treat arrears differently, treat payment holidays differently?
No, what an interesting thing that you see is, again, the question about how are you going to, in fact, collect ultimately the payment holiday money. And in some situations, some markets, not only talking about jurisdictions, but for instance, consumer loans and auto loans, it's more common just to add the missing payments to the end of the maturity of a transaction. But that implies very often that the transaction does not really meet the requirements of the securitization, so it has to be repurchased. If it is a revolving transaction, it doesn't have to be a problem at all. Even if it's non-revolving, you can do it. But that has also an impact on how the quality of the pool develops. And for instance, in auto loans, it's very important to know what level of repurchases you see are linked, in fact, to this payment holiday situation or not. Typically, for RMBS transactions, you will not see a lot of repurchases, people will try to evade that situation. But the problem is also with all those discussions, transparency and disclosure. We would like to know more. And of course, as a DSA, I would like to see more disclosure for my DSA members. But if I look abroad, I must admit in the UK, the picture is relatively good. There's quite a lot of disclosure. But in other countries, I mean, I would like to know a bit more about how things are developing in Italy. I guess
are they hiding stuff up again?
But I mean, the hard numbers are not always there. But even in Germany, where the German auto industry, I think, is in a good shape, at least the financial products are in a good shape. I'm not talking about the diesel cars, but I mean, the car loans are good, but you don't get the information really to justify that. And that comes back again to my earlier complaint. Well, what do investors want to know? Well, any kind of information is useful. And if a large auto loan party just doesn't provide information and more or less claims, you have to rely on the quality of a German transaction, for me that would not always be sufficient. So from that point of view, I think it would be very helpful if everywhere in Europe people would be more actively disclosing the actual position of the loans in terms of payment holidays, whether those will be collected later, whether the loans are taken out by repurchase.
It's treated as arrears. It's interesting what you say about the auto loans and the German market, because we have Jan-Peter Hulbert from TSI on the line, also a big pro on transparency. Mr. Hulbert, are you there?
Yes, I can hear you. Hi,
Great.
How are you?
Great, thanks for joining us. Thanks for joining us this afternoon. Rob commented on the various states in Europe and also for the German market. We've seen car loans plummet in the southern European markets and a little bit less, fortunately, in the Dutch and German markets. Looking at the ABS market, what's your current status of the German market compared, for example, to the Dutch market or to the Italian market?
Yeah, I mean, first of all, thank you for inviting me to participate here. And the question obviously is a good one, and I'm happy to discuss car loans and auto loans, and we can avoid the diesel cars. So I think we have seen a pretty stable development in the market, and the study that Rob just mentioned from the European Data Warehouse, I think, speaks for itself. So we can see there's very little RMBS outstanding in Germany. There is a moderate increase in delinquencies. The same applies for auto loans. There we even have a flat development, so delinquencies are flat in this asset class. Interestingly, in consumer loans, delinquencies are even going down. And on the other hand side, you have equipment leasing, commercial leasing, where you can see already a significant impact on delinquencies going up. So in the underlying pools of the different originators, obviously the consequence of the crisis can be seen. And the question is, what explains then the development? And I think you have discussed the topic of payment holidays and forbearance measures. In Germany, as you know, we have a general law allowing to forbearance until end of September. So until then, and that applies especially to consumers and self-employed individuals, you will not see as far as I can see, an increase in delinquencies and deterioration in performance. At the same time, you have a law which says that corporates are not obliged to file for insolvency until end of September again. So also in that sector, that prevents probably negative deterioration of the pools. And therefore, I think so far we see a very stable development. And the big question obviously is what will happen in Q4. So after the end of these measures, will they be extended or not? So that's really the big question, what to come, and that all depends obviously on the question, will we see some kind of V-shaped recovery, or will we have a longer type of recession, which we all don't know as of now.
No, we should have that crystal ball. What's your reaction to basically the quite optimistic or flat developments in Germany?
To the extent I am knowledgeable about the German market, I mean, of course, the DSA is very much RMBS focused and less auto ABS, but I think in general, what I know about the German market situation is quite okay there. And but I mean, my only comment, but not only about Germany, but pan-European, is I would like to see just some more basic disclosure about, what actually is the number of loans affected by payment holidays. Just that kind of basic stuff. Yeah, there's only a few people, in fact, reporting that at the moment. Only in the UK, there's a more wider audience of people reporting it. But there's a handful of people in the Netherlands, and the rest of Europe is still rather silent. And even a lot of my DSA members. And for me, that's a bit disappointing. You can say, okay, the numbers are so small. You can imagine that for a German auto ABS where you have only 5 loans subject to a payment holiday, they say, well, why bother reporting that? But still, just to know the number would be useful for an investor.
Yeah, maybe go to Jan-Peter.
Yeah, maybe Rob, I can comment on this, and I fully agree with you that disclosure and transparency is key. And I think it is in the responsibility of originators to provide the transparency. We have had conference calls discussing this topic with a lot of originators and also arranging banks. And we have seen a very diverse picture because the first question was different from originator to originator. How do they treat the underlying asset itself? Do they grant payment holidays upon request? Do they check for it or not? And then in the second step, from originator to originator, from structure to structure, you have different mechanisms legally from a documentation point of view, but also from the data and IT system perspective, what is possible. So you do see restructured loans where as you said, the 2, 3, 4 installments are simply put to the end. You would find other originators who have a mechanism to repay the existing and to grant a new one. And then in the ABS transaction, it would be a deemed collection and can be replenished when you have a replenishment phase. So you have a very diverse picture of what originators can do. And I think it's also in the interest of investors that originators do make transparent what they are doing in this as much as they can. I agree with this.
Thank you. And thank you for joining us today, Mr. Hulbert, Jan-Peter. And thank you, Rob, for these valuable European insights. Well, gentlemen, we've heard some very interesting insights today. And I would like to use the last part of this webinar to look a little bit ahead towards 2021 and 2022. Could I ask each one of you to do a short wrap-up on the topics we discussed today and your outlook for the upcoming 2 years, basically?
Just starting just from the economic side and also the market side, I think uncertainty all around. Probably share a bit of views also. We heard earlier also during the calls, probably a bit more optimistic. I'm also a bit more optimistic personally though. But still we have this medical issue still around us and the virus is not gone. And there are just risk embedded everywhere. Taking a bit more optimistic view here, if it doesn't, actually there is not a second wave, I'm relatively optimistic. I think that the situation can be handled for both the economy and also the banking sector and the securitization world.
Sounds good. Ello?
I cannot look into the future. But my message for the future would be that people continue to correctly balance the interest of different stakeholders. Not only focusing short term on what is convenient or even economically beneficial for the originator, but really keep well in mind the interest of the other stakeholders, also because that benefits the market ourselves in the longer term, because we are being seen then as prudent and consistent.
One final question there. Do you expect the same amount or even more disputes as in the credit crisis in a year from now?
I hope not. Depends on how people are going to behave over the next couple of weeks.
Okay. That might be a great bridge to Arjan.
Yeah, I don't know. I think we're not nearly there yet. I think the government is supporting everything, and it can't last forever. But I understand that what I hear from you as well, that we're in a good shape. The banks are in a good shape. There's a lot of help from the government and so on. So that's relatively positive for the future, in that sense. And I think the only thing to add is do be transparent. Report like you should. That's fair.
And allocate correctly.
Well, certainly, yeah.
Allocate. That's a clever one.
Yeah. Arjan also already mentioned the disclosure this time, so I don't have to bother about that. My main conclusion, I'm just looking forward for the rest of the year and listening to what Mark van Lent told us earlier today. I mean, I'm quite optimistic, in fact, about the Dutch securitization market. We have seen already 10 transactions year to date, including 2 retained, admittedly. Last year we had 15, including 2 retained. So my guess will be that for this year we could easily get between 15 and 20 transactions, a few more retained than last year. But again, like last year, quite a lot of transactions where the full capital stack is being sold to investors, capital-driven transactions. I think we've made a change in the securitization market, and in this new situation, we are weathering the whole Corona COVID situation quite well.
Thank you. Great points, gentlemen, and thank you so much for sharing that with us. With that, our webinar almost comes to an end. I would like to thank all our viewers. We hope you enjoyed the webinar and gained some new insights today, what's moving our market. A special guest thanks today, of course, to Ruben, Arjan, Ello and Rob, and also to our Q&A questionnaires and people on the chat as well. Thanks very much, and we hope to see you all very soon. For now, from Amsterdam, we say cheers, gentlemen, and we hope you enjoy the drinks at home.
Cheers.
Thanks so much. Cheers. Bye-bye. Cheers.